Hello, hello, hello. This is Jessica Haley, peak performance expert with Verified Investing. And we're doing a special series on a trader's journey. And we're really diving into all things mindset, strategies, risk management, trading psychology, and really what it takes to be a successful winning trader. So today I have with me Frankie Candles, who I'm so excited to interview. And he is an educator, a crypto trader, and a technical analyst. Is there anything right now that people should know? Like, hey, this is what's going on in the crypto markets right now.
Yeah, I mean, right now we are in what I would say is probably the most important part of the cycle. For me, I am a believer in the 4 year cycles. They've played out pretty well in the past. Nothing's ever 100% accurate, but these things have rhymed pretty closely. And it does seem to me, when I look at the chart, when I'm doing my analysis, it does seem that we are following the 4 year cycle almost perfectly once again. Doesn't mean it's going to wind up playing out the whole time perfectly, but I would say just don't stray too far away from what has already happened in the past. Now, I do think the cycle will eventually break. Maybe this is the cycle that breaks it with regulation coming in. But I would say, like, just stay focused. I know we just went through a really brutal long bear market, and we are starting to see a little bit of relief here. But this is really where the money is made, right? Obviously, if 15.5 was the bottom, that would have been the best time to buy Bitcoin technically. But even now, like, if you could zoom out, just understand. I would tell people, understand. Like, I know a lot of people, after we got this most recent pump of about 100%, a lot of people are like, "Oh my God, is it too late? Did I miss the bottom?" And I'm like, zoom out. Don't think you missed the bottom now, because if you're going to wait and you think you missed the bottom and you're going to wait to come back down there, you don't want to be completely unexposed to the market. Now, could we go lower? Absolutely. Nothing's impossible. I'm open to all things happening. But I would just tell people, stay focused. And, likely right now, if not, even if it's not the best time to accumulate, it is, in my opinion, definitely time for accumulation. At least that's what I'm doing. As a trader, one of the big things I understand is anything could happen. Even if
Yeah.
the chart is
Yeah.
screaming that the bottom is in, it doesn't mean that it is guaranteed in, right? And, there's a lot of people who think that we could go lower, and I am 100% open to that happening. But as I see the charts right now, it does look like, unless we get some kind of a black swan, I do think it's probably more likely in than not, but not completely, blocking out any other scenario.
Where do you think we'll be in the next year?
Yeah, so I think that's really the important question, right? Because when I tell people that, like, I'll say it on my channel, I'll be like, guys, I think it's more likely that 15.5 is the bottom than not. And then they're like, okay, so we're going to 100K tomorrow? And it's like, no. No. Like, I made a video recently that was called "Is the Bull Market Confirmed?" And in that video, I dive in and I basically like show people why I think the bottom is in, right? And I only look at the data, right? Like, I am not one of these like tribal people that's like the only reason I think the bottom is in is because that's what the information on the charts are telling me. And as soon as that information changes, I will change my sentiment. So, but really, a lot of people think like, oh, we're going to go to 100K tomorrow. And that's important to, likely not going to be the case. And that's important to realize. I think that likely this is kind of the accumulation phase. Maybe we get another, short squeeze or another pump back to the upside. But I do think over the rest of the bear market, and the next halving is supposed to come, around mid to late next April. And, I think up until that point, even if we get a big pump to the upside, I don't think it's impossible to come all the way back down to some lower prices for maybe a double bottom or maybe a little bit of a higher low. So just because I'm saying I think the bottom is in does not mean I'm expecting 100K tomorrow. I actually wouldn't be surprised if we pump a little bit and then come all the way back down to those prices for something like a double bottom. So I think it's more or less, basically going to be an accumulation time where, if we get a pump, we'll likely come back down. It's just time to just kind of dollar cost average in. That's what I'm doing, at least.
So can you explain what DCAing is for those that don't understand?
Yeah. So DCA just stands for dollar cost average. And this is really like, this is somewhat debatable. I don't think there's many people that debate against it. It's really like the one investing strategy that is almost always effective over time, right? If you have a long-term outlook, basically what you do is you pick, some people do it differently. For me, I have bots. I use KuCoin, has dollar cost average bots, where basically you pick your coin, you pick the time frame, and you say, I want to buy $50 of Bitcoin every Tuesday, or I want to buy $50 of Bitcoin every 8 hours, or whatever it is. You could set your parameters, set your days, and then just let the bot do its thing. You don't have to think about it. You might buy a little bit down here, and then you might buy a little bit up here, and then you might buy a little bit down there. But once you average it all together, you wind up getting a decent, average buy-in cost, right? And then, if you're looking to hold that into the next bull run, which is what I'm doing, it's been a proven winning strategy, and I had wished that I had used it a little bit more.
Will you also share, your top 3 strategies when it comes to buying crypto?
Yeah, for sure. So number one is obviously, like, for investing, would be dollar cost averaging, right? And then the second best time for me to buy is probably the hardest one to master. And it's buying when it feels like the worst time to buy. And every time I've bought and felt like an idiot, it's usually been when I buy the bottom. When it's like, hey, I'm going to buy Bitcoin, and everyone's like, dude, it's going to zero. You're going to lose all your money. That's usually winds up being like the lowest I ever buy anything. So, buying the dips, buying like the panicky news, right? Like, you get these panic wicks down, like even like the FTX collapse, right? Like, this is the whole world is falling down. The FTX, a US based exchange, is going down. Crypto's actually dying now. Once you hear people saying that crypto's dead, like, that's usually the best time to buy. And so yeah, that would, I guess that's $2 cost averaging, buying the panic wicks. And then number 2, this isn't really a strategy to invest, but I think it's important enough to kind of fill the spot. And that is separating your long-term from your short-term. Now, like when I buy for long-term, like the Bitcoin that I bought, at 16K, at 18K, at 20K, I am not selling that Bitcoin until 2025, 2024, until we get to new all-time highs, right? Or start getting up there close. And like, I don't care if Bitcoin goes down to 10K, I'm not panic selling that big bag. I'm just buying more lower. I leverage trade, right? So I'm a big leverage trader, and that's my short term. So I'll do the day trades. I'll even get 3-4 day swing trades in with my leverage trades. But when I'm dollar cost averaging in, right now, I bought Bitcoin today. I bought a couple altcoins today on my DCA bot. I don't even know which ones they were. I have the bot doing it. And if the markets tank tomorrow, I'm not worried about that bag at all. It's just those are focused on accumulating. I don't really care as long as I'm getting a decent buying cost. And then I use the leverage trading for my short-term plays.
Do you have like a checklist that you go off of before you enter a trade?
Yeah. So, like I said, for the longer term stuff, I kind of just set and forget. I just buy and forget about it. For my leverage trades, though, like my shorter term day trades, I definitely have a checklist. It depends on what strategy I'm using, but every strategy I use has a checklist, right? Like I like to have at least 3 confirmations. For me, I'm really big on volume profiles. Yeah, I don't know if you want the exact confirmations I look for, but really, I look to come to the bottom of a volume profile, which is essentially just a range. And I look for longs at the lows of the range. I look for shorts at the highs of the range. And then I use indicators. I know there's all different kinds of traders out there, pattern traders, price action traders. I use indicators as well as traditional TA. But I really look for, I'm a big divergence trader. So I love trading divergences, support and resistance. And then I use Market Cipher and Lux Algo for the most part. To confirm my trades, as long as the indicators are pointed in the right direction as well. I try to find some confirmations between those. And then, like I said, those trades, I'm in, I grab my bag and I jump right out. I'm not looking to hold these to the moon or anything like that. All I need is that movement to make that money. Other than that, I'm not worried. I'm just looking to look for that movement, jump in, grab my bag, jump right out.
How do you actually decide when to take profit, though?
So based off of all technical levels. So for me, right, like I said, I'm a big volume profile guy. So with a volume profile, it basically, for people who might be listening and don't know what it is, essentially you select an area of candles and it gives you 3 levels. It gives you a value area high, a value area low, which is just the high and low of the range, and then it gives you the point of control, which is usually somewhere in the middle of that range. So if I am trading based off the volume profiles, and let's say I get into a long at the low of the range, my first take profit is typically the point of control of the range, because it's usually about halfway through the range. So I will take partial profits at the point of control in hopes of getting back up to the high of the range. But that way, if we wind up rejecting the point of control, we don't get back up to the high, I've at least taken profits and moved my stop loss to break even. So at least I win a little bit of money. But yeah, that's basically partial take profit at the point of control, and then the full take profit or final take profit at the value area high. And then sometimes I'll even leave a third take profit where I'll take a little bit out the POC, a little bit out at the value area high, and then I leave a little bit in case we get some kind of crazy breakout.
Have you been in a bad trade before? And what have you done emotionally, mindset wise, psychologically to kind of weather that storm?